The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hey, looking good, Billy Ray, feeling good, Lewis. Let's take a look at the German DAX like we always do. As you can see on this 15-minute chart, we've had a little bit of a bearish Gartley forming up there at the 78% level, and I think that's a short-term pattern, but you know, you can look at it for today anyway. If we take a look at the DAX, let's the FTSE, you'll notice that this is a much larger chart. This is the daily going back to May when the high was made. We completed a 61% retracement from the September high when we were making the highs in the U.S. stock market. So whether this is going to mean anything or not, but you can see we made it 4 days ago, and we've been down 3 of the 4 days. So that's whether that's going to continue on or not, we'll have to wait and see. Now, folks, I have some good news for you. I received an email from someone yesterday that has found the holy grail for trading, and he was a W.D. Gann student. He's 29 years old. He lives in a far, far away country, but he wanted to share it with everybody in the den so that all their troubles will be over. So here it comes. Get your notes out because this is something you do not want to miss. I'm going to give you a second to get a pencil and paper so that you'll be ready. 10, 9, 8, okay, 1, it's over. So here it comes. Get ready because it's very easy to understand how it all happens. You can see all these lines here, and I swear this is actually true. Now, I put this little note here at the bottom there that it was sold at Sotheby's for $12 million, but this young man really thought that he had something here. When I asked him to explain what he means by the lines, he says, "What? It's right there in front of you. Why can't you see it?" And well, I can't see it. So anyway, that's neither here nor go. You know, that's who I thought it was, Bill. I thought it was Jackson Pollock sending me a chart. But I can't joke about Jackson Pollock because my friend John Jameson over in the UK gets quite upset because he happens to be a Jackson Pollock fan. I wanted to share a chart from one of Martin Weiss. He's one of the folks from, hold on just a second here. He's one of the folks that does a lot of stuff on the internet with what we call advertising, and he does a lot of, how do you say it? Shucks. More fear, you know, like Dr. Doom. You know, I don't know if this stuff means anything or not, but let's just take a look at it, what he's looking at. And it shows an interesting thing. This was some of the things that Shane Smolian used to talk to us about the Fed, you know, taking money away. So you can see whether this means anything or not, I don't know. But anyway, that's a very interesting. He also had one that was quite interesting, which was about the 3 different types of bubbles, but I'll share with you folks that another day. I wanted to bring to your attention, this is from this fellow, I believe his name is Steve Kimball, Steve Kimball, and he brings this chart about the gold chart on a long-term basis, you know, going back just to 2008. That's the monthly chart on the 2008. He shows the breaking of that trend line. However, if you take a look at the really long-term picture in the gold market. Let's just get this up here, and I think this would be a real interesting one to go through. But you'll see here is the 1980 high. We had the low. You'll see back there in 76. Believe it or not, that's where I started working at Drexel Burnham in August of that year. Started buying gold and silver, and you had to be an absolute idiot. I mean, look how many months in a row it was up. I think it was only down 2 months in a 5-year period. So you had to be pretty silly to lose any money on that one. But you'll notice that high was on that was in October. Excuse me. The high was actually that I put that October high because that was the one that was very significant to me because I was short up there, and that's when those Iranian jets hit Iraqi power plants, and Charles Osgood was on the show and said the price of gold was soaring and it was only up $2. So it turned down that October. The high was actually made on January the 20th. 1980, I believe at 865 an ounce. Then we made the big high up here at 1932. That was back in April. And you can see here, after we had the correction, this does not look like a bubble, folks. This is just a normal correction in a long-term bull market. If we ever clear 1400 or 1380, something like that, this thing is going to go. So I'm looking for, a pullback to try to find a place to buy it. We've been looking for a potential here on the downside in the gold just because of the fact that we had that really nice run up and then we were expecting the market to come down. Let's just bring this up here. I think I've got the updated one of this. I hope I do. I hope I do. Oh, I don't. Anyway, the number that you want to watch is that, well, it's the same number, so I should put it up here. Let's just get it up here. To get up here, we'll take a look at it. And now remember, we made a higher high here, folks. We made a higher high here up at 1349. And now that move down to 1349, it still gives you the support that you're looking at the one we were looking at before, which is at $12.99. Well, we're $30 away, but remember, we have not had a major correction. We had a $20 correction yesterday, but that's the same as the one we had was actually $25, but it's the same correction that we had, way back in middle of January. So there's really nothing going on in that gold market. I mean, it looks still relatively bullish. The silver doesn't look nearly as bullish, but it still looks bullish. But if you look at silver here, just for a second, I've got a really good program for us on the second half. When we get done with this, I want to talk to you about the grain markets and where we sit here with those. But here's the silver. You'll notice that we made a double top. The secondary top was a half a cent lower than the top that we made back on January the 30th. And we were 10 days down in both of those corrections. So that tells us that we should have good support at 1520 in silver. That's those old highs that broke out, and it's also the 382 retracement of that move. So you want to keep an eye on silver at 1520 because it should start playing catch up, and that's what when that thing goes, boy, it's a rockin' and roller. We owe a lot to Mr. Z in the room for pointing this out in the gold market because he's been spot on to that gold. He actually bought some today at the 1325 level, and he posted it just as it was buying it. Went right down to 1324.90, and it had a quick $8 rally. God bless you, Mr. Z. That was a really beautiful one. Since we're talking about accolades, let's just give Norm Winsky a pat on the back here for his call with the Mercury going at 0 degree latitude. You can see that at 11 a.m. the other day. That was when the absolute bottom in the wheat market was hit, and that bottom, folks, whether it means anything or not, and I'm not sure it does, but we'll just show you what it does. You can look at the chart. I'm not even going to talk about it, but it's a 60. Well, I have to talk about it because people are not watching the whole time. It's a 61% retracement on the long-term weeklies. So we'll put that up and let you take a look at it. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the chart of the Russian grain robbery in 1972. This chart goes way back to 1970. I know a lot of you folks weren't even born then, but we were still trading back in 1970 all the way through 1976, 77. Well, no, all the way through 1980. We were using either a Bunko Ramo big board that was on the the wall of some of the stock exchange and commodity exchanges. Also, those of us that worked at home or had access to it, we had our ticker tapes from the Board of Trade and the Chicago Mercantile Exchange, where the tapes would go down into a big wicker basket, and you had to change it a couple times a day. The only way you got intraday chart is if you hand marked the charts, which I did at times. But I wanted to share with you some of the key things that happened during this 5-year period between 1970 and 1975, because I believe we are getting ready to see a replay of something very similar to this. The first one that you look at there is August of 1971. That's when President Nixon took us off the Bretton Woods agreement, and we went to a off the gold standard. He made in 72, it was made legal, to own gold. And then the CME brought out their contract in the fall of 1972. Trading at about $100, 110, 103. I can't remember exactly. But the key to look at here was this July 1972. You'll notice the arrow pointing there. You'll see that big up day. You can't see it because it's kind of small, but that was a big limit up move. And that was the start of the Russian grain robbery. Now, folks, that robbery continued for 3 years. I mean, not only that, but if you look at the time during October, there was a big ABCD correction that occurred in late 1972, right around November, December. There was another one, if you'll notice, in 1973, the same type of correction that occurred back when it went from about 430 a bushel down to about 370 a bushel. Folks, $1 a bushel back in those days was so big that that was the monster bull markets that they talk about. But this was the mother of all of them. It made a lot of money for a lot of people, and I was long down in there, and it went up, and that's it. Now, the other arrow that you see on the far right over there, on the far right in 1975, that what you don't see is how I lost all my money during that move all the way down, and actually it was 74, not 75, 74, and I didn't trade from December of 74 until it was about March. It was about 14 months, about March of 75, and I was looking to. That's when I started buying the soybean oil spreads. But that was what that green arrow was at that point right there. So the first part of my success was when I bought gold back in the well, this was the second. This is what I learned. And luckily, well, not lucky, but I learned a lot by losing all that. So let's just move on to a couple others that we want to look at here as we go through looking at some of these. Here is I just wanted to give you an idea of what this looked like on a shorter term time frame, because if you took this and looked at the corn, and you'll notice here again, you'll see that July of 1972. That's that green arrow. That was the start of the Russian grain robbery, and corn went from $1.40 a bushel all the way up to $3.80 a bushel. That's a $10,000, well, $15,000 move in corn, and the margin was $300. So you can imagine, the moves that you had. And look how many times it went to $4, folks. Now $4 is a floor, because we're trading about $3.94 now. So this is interesting, because the reason for doing all this, and the reason for that is it's been 48 years since this happened, and this is something that I think is really very, very important. By the way, this is a very important day in history. Today, on February the 22nd, 1980, we became the gold medal champions for the Olympics, and I was fortunate enough 15 years later to meet some of these boys that I've been friends with. In fact, I got emails from them today, and it was really great, and one of the best days I've ever had. One of my saddest days was 20 years later in 2000. They were the guests of honor at the Winter Olympics in Park City, Utah, I believe, and I was invited to go. And believe it or not, I was in China on a 3-week speaking tour, and I couldn't get out of it. I did everything. In fact, I even tried to fly for a day just to get over there, but the schedule didn't make it. But I was fortunate enough to find a replacement, and his name was Mark Douglas. And Mark had a great time, and it was great, and it was all fun. Okay, let's take a look at a couple of these longer-term ones, because I think they're enough to really make a case for what we really need to do is to watch some of these. Here's the wheat market. Let's just take a quick look at this. Here's the wheat market going from 1970 to 1972. Now you see that dark dotted green line. That means it stayed in a very tight range of about $1.75 a bushel. There's some prices missing here. Why, I don't know. Twentyman sent me this price yesterday. He gets this all from CQG, and he missed those prices. He asked to get them replaced. I said, this is close enough, but I wanted to show you a couple things. One is the fact that when the market did top in 1974 in wheat, you'll see that it was a beautiful ABCD pattern. That shows you these patterns work, here and there all the time. So they're there watching it. What we're doing now is we're watching the relationship, what's going on in the grain markets now to what happened during that time. And the reason why is it was a Russian grain robbery, because what we were trying to do at that time was to make Russians our friend and get away from the Cold War. It took about 15, 16 years to get that done, thanks to Mr. Reagan, and he kept bothering Gorbachev to blow up that or get rid of the wall, which they finally did. That was November of '89. And then that was the death of communism. And what we're looking at now, 48 years later, we've got a thing going with China. Now, wouldn't it be interesting if there's a deal made in Washington today on the what they're talking about quite a bit is if there's a deal with this trade agreement with China, and also China gets to start buying our grains. And where are they buying the grains? They're buying them at a much lower price than they've been in a long time because we've had good crops for 4 years. So that's what we're looking at as we're seeing some of these things unfold. So I think it's important to pay close attention to it. If we look at the corn here on the patterns that we're looking at from that time of 1972 on, you'll notice after the green arrow there, of course, was the July. That was the Russian grain robbery. But you can see the ABCD and the butterfly pattern that occurred when corn hit 402 in that year of 1974. I happened to be in a delivery for corn, and corn moved $1 a bushel. Believe it or not, $5,000. I was long. I was only long 2 contracts, but Bunge was short, and they had to cover. And boy, they got really had it hammered to them because there was just nothing available, and I just got lucky. I didn't get the whole dollar. I got about 60 cents of it, but 3 grand in corn at that time was a whole lot of money. So we're going to be watching these grain markets with a great deal of anticipation, especially with the possibility of El Nino coming this year and the fact that we've been really blessed with great crops for the last 4 or 5 years. But that might end someday. Let's take a break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted the monthly chart of corn going over the last 32 years. The important thing from my perspective looking at the charts is you'll notice that the low that we made back in 2000, the 78% level on that was hit on number one of the 135 pattern. That was a 3 1/4 bushel. And you'll notice that we've now made 3 higher bottoms, 1, 3, 5, 3 higher bottoms over the past, look at the time between 2014, 5 years, folks. We have not had a bad crop. You got to go back a long ways to find that. So there's a possibility this could be really good. The fact that this corn has held up extremely well, given the fact that since was it June or July that they talked about tariffs with these things? June, yeah. This held up extremely well, in my opinion, especially the soybeans. The soybeans have held up extremely well. This is the reason why we're really keeping a close eye. There are 3 reasons. First of all, the chart pattern is telling us that there's a possibility of a bottom coming in here. Reason number 2, there's also the outlier event that we might have an El Nino year, which we have not had a long time. When the currents, don't bring any moisture in and it gets very, very hot. That causes these big spikes like you see in 2008 and also in 2010 and 1994. They don't happen very often, but when they do, they're usually a big surprise. So you want to try to be prepared before the surprise happens. The third reason, which I think is extremely important, is we've gone 4 or 5 years now without any type of a crop problem. And yet we still don't have monster supplies. So this has got the earmarks of something really big. Now, whether that'll happen or not, I don't know. But that's the kind of stuff I was doing way back in 1975 when I was looking at some of these things on a technical basis. And I didn't know diddly squat about, El Nino or anything like that. Well, I knew what the anchovies were and stuff, but we didn't understand the ramifications of it until, many years later. We've got a whole bunch of stuff in our times now to see what's going on. Let's take a look at a couple of the trades that we were looking at earlier this week. We certainly want to give a hats off to Norm Nixon calling some of the lows. Also, Mr. Z in the room on the gold and silver. He's been extremely bullish on those, and they've been very, very good. We were looking at the pork market, the June hogs, and you'll notice here that this is what we were expecting to get down to this 78% level, and we've had a really strong rally yesterday in the hogs. They rallied well over 2.5 cents, which is well over $1,000 in just 1 day. So that there's a situation that if you did buy those hogs, you certainly want to put your stop at break even so that you don't have any risk involved at all, because you don't know whether these things are going to work at all. When we first posted this, which I believe we posted this on the 20th, we posted it 2 days ago, and as you can see, when we were coming down there, it was stopped right at the 78% level. I mean, just absolutely spot on. And do we know that it's going to go higher than that? No, we don't, but we know that there's a 3-drive pattern there, and it has some very strong harmonics that are there. You're sitting right at the 78% level. You've got double ABCD patterns there. So that's what you're trying to do, is when you're finding some of these, is if they're going to work at all. But that's neither here nor there. We're just watching it. Also, we talked about, thanks to our friends in the room here at TFNN, they were talking about the head and shoulders pattern in the long-term weekly chart in the NASDAQ. And you can see here that it has all the earmarks of a head and shoulders pattern, because the right shoulder is lower than the left shoulder, which happened in March. Then the high occurred, of course, in September. And that's the head, and then the right shoulder is lower than the left shoulder with time equal in time from high to low, high to high, and high to high is equal. So that's also very good. Asking to take a look here, Bob from Spokane. I don't know if it's snowing up in your area, Bob, but it's snowing like heck here in Tucson. We got about an inch on the ground, which doesn't happen very often, but that's what we're keeping an eye on right here. Let's take a quick look at this British pound. There we've got it. I'm going to bring this British pound up on the longer term basis because I think this has got a chance to go, folks, because the news, I believe that this Brexit thing is going to just die. That's just my guess. Look at this downsloping line on the weekly chart. When we came back and made that retracement there, which was almost at the 382 retracement at 128 is what I recall. We're trading at 130 and change right now, but we came back and touched that downtrending line. We all know that as the 20-min line, acts as a fulcrum, to pushing high prices higher. And if we get above 130.160, and if we get above 130.160, this has a possibility to really have legs. Because on this long-term weekly, from January to December, one full year, it took to make a 78% retracement. So you can see that this is a very, very nice technical picture here, and it looks like it's got the chance of moving to the upside, with just the opposite of what we're seeing, of course, in the euro, which today is going to be interesting because the key point in the euro, as we know, more than talked about it all week long, is at 112.20. We're trading 100 pips higher than that, so it's easy to say that we could be moving higher or lower in the euro. But the British pound does have positive bias here, and when you stop and think that the news is relatively negative, I think it's acting pretty good. If you want my 2 cents worth. And remember, since we're talking about the currencies, let's look at this U.S. dollar because it is not broken out of this head and shoulders pattern as of yet. It's getting close because we got back to that 97 level and it was backed off, pushed back again. But if we get above that 98 level, that is going to be a breaking of that head and shoulders pattern, and it's going to be a big move in the dollar index, which means the euro and most of these others, like the Canadian, some of the others are going to have some real serious problems. But right now, it's looking pretty good. So you just have to wait, see where it closes today. Let's take a quick look here before the break to see where we're trading on some of these things. And the euro, well, the pound's still at 130.21. The euro's trading at 113.39. It got down to 113.15 and held that level. So we'll see if that's going to mean very much or not. But that's really what we're watching right here. Now, the bonds, which we've been saying are in a very weak format, and I wanted to bring that to your attention, but it's probably going to have to be after the break because where did I put that chart? Larry. I know I brought that bond chart here. Oh, dear. This is really embarrassing when I look at these darn things. I got them all set up in a line, and then when the line comes up, I can't find the line. Shucks. I'll bring it up at the break and show you that we're at a real key level in the pound. We showed it yesterday, so if you go back and review the show from yesterday, you'll see that it was that same chart that we were following there. Oh, here's a really nice chart here on the pound since Bob asked about it. Here's the daily. You can see that 128 level that we just talked about. That's where it touched the 20-min line. It came right in there, spot on perfect. That was a 78% level of the low that we made back on the 14th. It was a 50% from the low on the 1st of January, 2nd of January. 877-927-6648. Stay tuned, folks, and I'll bring that bond chart up so we can sort of see what's happening.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, folks, I posted that Treasury bond chart. As you can see, the 618's on the upside, and it hit it again today. We got a good caller in today. Thank goodness we have Mr. Z. John, how are you doing?
Hey, Larry, I'm doing well. Sounds like you're doing the same.
Yeah, I got 2 inches of snow in Tucson. Would you like to have it? We have 2 inches of snow in Tucson on the ground.
Excellent.
Yeah.
And thanks for that review of the long term on those corn, wheat, and soybean charts. Sometime we're going to get a bull market. Maybe it's this coming spring and summer, so at least we're prepared.
Maybe in our lifetime. We'll see. What can I do for you, my friend?
Wanted to ask you if you'd help me navigate the rally ongoing in copper. Just for backgrounder's sake, Larry, you and I spoke about copper back on January 24th. The price was down at $265.
Yep.
And it's rallied nicely. Profits are building. And I'm looking for your help, please. I'm speculating that this is a move that eventually takes copper price up to retest that 332 prior high, and how long it takes to get there, frankly, I have no idea. So I'm wondering if you can just shed some light on trying to navigate a rally phase, where you'd wait to rebuy, what you'd be looking for. I'd just like to hear your thoughts on that matter. It'd be very helpful to me.
Well, John, I posted the daily chart in there, and my hat's off to you, and everybody in the room take their hats off to you on that copper, because just like with natural gas, you nailed it right to the spot. If the question that you're asking, the only way I can answer it technically is to go to a smaller time frame. So instead of looking at daily, what I've done is I've brought up a chart here on the 4-hour. And if you look at the 4-hour chart, which goes back to way back in October, you'll notice that we're right up at a 1.618 expansion there at 297. Plus, you have a really nice ABCD pattern that has formed since the the end of January to rally up into early February. The little pullback, 10-cent per pound pullback that we had at 275, which matched the old highs, and then you had this move up to this level right here. So in my opinion, copper is getting ready for a correction. How much it's going to correct, I'm not sure. But that on the shorter term 4-hour chart, I cannot be bullish on this given the fact that you're at that 1.618 and a 1.27 expansion of moves that occurred way back in October, and you have the ABCD format there also. So I would be waiting for at least a 10-cent correction, because you had a 10-cent correction from February the 5th into the 13th. That 8-day correction there was exactly 10 cents a pound. So 10 cents a pound, from the 295 would take you to 285, and as you can see from the chart, 285 is where it broke out from. So that's what I'd be looking for, is a 10-cent correction in copper to be a buyer there. That's from a technical standpoint.
Well, I've got a very special request on account of what you've just said. I'd like you to please order and ensure that we do get that 10-cent pullback to 285.
Okay.
I'd love to take a shot at it.
I can do that, John. I'm going to call my friends in New York from the old COMEX exchange that are still trading, and I'll tell them to start selling to get it down to that 285 level. Now, these are the same guys that I used at Duke and Duke when we were trying to corner the orange juice market, so be really careful there, okay?
Mortimer would be very pleased.
Keep your sense of humor, buckaroo.
All right, very good. I might just switch topics on you and just ask you a bit about that chart that you just put up right at the start of the segment. And for somebody, you posted the bond chart. And here's my question. If we assume the 147.05 high that came with a double high this week, I think it was Tuesday and Wednesday, if we assume that's a top, given your work, where's the short on this bounce as you see it?
Today, it made the 61% retracement today. I mean, if that's what you're looking for, if you look at the notes, I mean, just look at the same chart on the notes. I'm going to post this for you because, this is the largest of all the commodities that we trade. This is look at the 135 pattern that we had on the notes. So this is these are lower tops, and this is not a bullish chart in my opinion. It should have, you can see by the blue ABCD line that we've got another handle to go, which would be equal to about 2 handles in the that's two full points in the bond. So that's what I'm looking at, John. I don't know diddly squat about the fundamentals, but this is what it looks like technically.
Right. Very good. Thank you on that. I see what you're referring to. One parting question, if you can. In the past week or two, you interviewed Tim, is it Bost? B-O-S-T from
Tim
Florida?
Bost, yes, out of Sarasota, Florida, you bet.
Right, and he had, over a month ago, identified a point in time, February 13th or so.
Sure, I'll put this up. I still have it.
As being a potential turning point. And I'm just wondering if you have knowledge of the way his cycles work. And I pose this question. How far past that date in time is far enough that suggests, no, it's not a turning point top? The cycle turning point top candidate had come and it had gone, and it's no longer possibly effective. Do you have any ideas to share on that subject?
I can only tell you from pattern recognition, and I look at the lunar cycles, very, very closely. I also try to follow the Mercury cycle that is very good. Shane Smolian did a lot of work on that, and that was work that was also done by George Baer. Norm Winsky does the same thing. So you basically, from the full moon of the 19th, you only have a 2-day window. So it had to top somewhere around the 21st, and so far the top was on the 20th, I believe. Now, I don't know if it's going to be the top or it's going to continue to go higher, but that's all I do is I look at that pattern, and if we go very far past that date that I'm looking at, and we expand past the patterns. You know, we didn't get any higher than our number that we were looking at was right at 2,800 in the E-mini S&P, and of course, you know, we didn't quite make that. We got to 2797. I'll put that up here to let the folks take a look at it, because you can see the ABCD pattern that was there also. Do you see it there?
I do.
When I posted it, yeah. Okay,
yes,
that's
indeed.
what I was looking at, and the time and price were coming together, so I figured it was a relatively nothing's very safe, but it's safe if you put a stop in. And you know, as you know, I don't watch the machine all day. As soon as I'm done here, I probably won't look at this machine again for another hour or so. But it's set up to do it. Whether it does it or not, I don't know. We got the news out there, because if they come through with a really great deal about China and everything, then it could be important. And remember, in the background, you got that meeting coming up with the Korean guy, and the Korean guy doesn't even put his shaving cream on until he calls the premier of China. So this is probably all manipulated in some way. So I don't know. I'm just looking at the charts.
All right, Larry. Listen, thanks so much. You have a good weekend.
Bet. Hey, thanks for calling in, John. We love you. Keep up the great work, too. 877-927-6648.
We both know you've got what it takes to crush your goals with the will to make it happen. So why haven't you accomplished it yet? For most, the answer is fear. Fear is that limiting factor that stops us from getting what we truly want, but it doesn't have to. That's why on Wednesday, February 27th from 5 to 6 p.m., I'll be hosting my 1-hour workshop, Overcoming Fear in 5 Easy Steps. Hi, I'm Steve Rhodes, the 2018 Market Timer of the Year, author of Mastering Probability, and an expert in human emotion. Subscribers to Mastering Probability gain free access to this extraordinary workshop where I'll coach you how to bust through your barriers of fear. How you respond to fear is what sets you apart from the rest of the crowd. Look, this could be the most valuable hour we ever spend together. So come to the homepage of TFNN.com and begin your 30-day risk-free trial of Mastering Probability and take the next step towards the life you deserve.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I want to end the program today. By the way, our friends up in Flagstaff, Arizona, just got 3 feet of snow last night. So it's really amazing. Here's the chart of the monthly chart of soybeans going back over the last 20 years. And as you can see, we did stop at the 78% retracement of the low from 2006. And if you'll see that low in 2006, it stopped at the 78% retracement of the low of 1999. So we know that's a very important number. And since that time, we've been rallying for about 8 months. We haven't gone anywhere for sure, but we certainly haven't gone down. And considering all the stuff they're firing at us from China with the tariffs, this actually looks pretty good. You can see the butterfly pattern that formed down there at $8. Now we're $1 a bushel higher. Keep an eye on this, folks, and we're certainly watching it here 24/7 to keep an eye on it, because we do have a potential here, and the key word there is potential. Whether it'll happen or not, I don't know, but we're certainly keeping a close eye on the weather and anything coming out of Washington, and most importantly, the price charts. Those are the ones that sort of lead us to the promised land when they're there. Sometimes they don't always look like the way you'd like to see them, but at least it gives us some guideline of what we're watching. The key chart, I think, this week is going to be this chart on the NASDAQ this weekly, because if we close lower this week, which would be unusual. We've been up for 8 weeks, so it's very, very overbought. If we close lower, that would complete the head and shoulders pattern, with the left shoulder a little bit higher than the right shoulder, which means it's even more bearish if that's the case. And we'll follow that through over the weekend, and then, of course, on Monday as we look at some of these things. But this is a Friday in an up week. And we've been up for, 7 or 8 weeks now, so we'll see what happens. But it's going to be interesting, as it always is. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks!